Hello and welcome to another Daily Dose of Insights powered by Container xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points of container markets and hence your business. Today is Monday, so we have what we call a Macro Monday here at Container xChange. We typically look at the week ahead and the key sort of macroeconomic data points that will be released this week and are expected to move markets this week. So let me quickly share my screen to give you a little bit more guidance of what I'm talking about. Of course, the entire world tomorrow, first and foremost, looks at the US East and Gulf Coast ports, where there's a significant strike action expected to start at 0.1 a.m. in the morning. Dock workers are expected to go on strike. This is very significant because it represents the first significant strike action at these ports for a couple of decades. So there is considerable sort of uncertainty as to what will be the impact of this and how long will it last. While some commentators expect this to not last very long because of the upcoming US elections, etc., there are also commentators that say, hey, this might drag out for quite a while and have significant impacts, not just on US imports for the upcoming holiday season, but particularly also for the global sort of network of container logistics, because we've talked about recently, again, it's a network, and if you sort of pull on one side of the net by imposing a disruption like a strike, this will be felt by, I don't know, for example, vessels or containers being missing for export in China a couple of weeks later. So that starts tomorrow, and of course a big highlight or low light, depending on your vantage point for this week. Then we have a couple of macroeconomic indicators as well. We have today actually Chinese PMI data coming in. This has already happened. Both on the services as well as on the manufacturing front. We've seen very weak numbers. Manufacturing now was in contraction territory for the fifth month in a row, and services on a downward trend as well, confirming the negative state of the Chinese economy, which is, if you follow the stock market, you've seen it as well, which is the reason why the Chinese government has decided to significantly prop up the domestic market with just sort of easings of credit conditions, etc. And that has pumped up the stock market over the past couple of days. Then also today we have German inflation data coming in for September. So this is preliminary data, expected to come in at 1.5 to 1.7% versus 1.9 year-on-year last month. And Euro area inflation data coming in tomorrow, likely to confirm this picture with 1.8 to 2.0%. So this is below sort of the 2% range that is targeted by the ECB, and it's likely another pointer towards another ECB rate cut next month, or actually in November, I think is the next date. Then tomorrow we have Euro area and US manufacturing data coming in, expected to show continuous contraction. Also there, market conditions don't look so positive. Euro area has been negative for quite a while. For US, of course, there's still the question of whether this will be a soft landing or a hard landing. And then on Friday, there's key US labor market data expected to come in. There's non-farm payroll additions and unemployment rate, and both are likely to be weak. So low non-farm payroll additions and slightly increasing unemployment rate. So also there, likely we'll see further rate cuts by the Fed in the upcoming months. They already started in September with a jumbo rate cut of 0.5%. So likely the picture will continue there, and key Euro and US central banks will continue to lower rates. Now, this is it from us for today. Thanks a lot for tuning in. Have a fantastic start into the weekend. Looking forward to your comments as to what you expect the container market, and specifically the US container trading market, to react. How this will react to the upcoming US elections. Whether we'll be seeing a Trump win or a Harris win. Now, that's it. Finally, thanks a lot, and see you on Wednesday. Take care.